But I think there are a lot of people who get interested in Bitcoin, then get interested in Ethereum. Like the next level is kind of staking. They're like, I know there are these opportunities in DeFi and I want access to those. I just don't know what to do. And so that's where we come in, where say, here is the sort of the interface that you're familiar with. So if you want to generate returns from your asset, instead of you becoming a DeFi expert and running like a little mini hedge fund out of your garage or something, you're able to just have a single click deposit and then have those assets deployed. So with rETH, we're launching our first vaults in partnership with RockSolid, which is super exciting.
So let's get to that. I mean, you guys just announced the 3 million raise, I believe. So congratulations on that. Hey, Sohejl here. Thanks for tuning in. Real quick before we begin, if you enjoyed this episode, if you learned something, please consider to follow or subscribe or share this episode. That helps us out a lot. It helps us to reach more people and to spread quality education across the space about crypto and Web3. Also, if you're part of a crypto project or represent one and you would like to come on the show or do sponsoring, please get in touch with us. And lastly, everything we talk about today is for educational purposes and no financial advice. Enjoy the show. All right, Steve, lovely to have you on the TEACHMEDEFI podcast.
Hi, Sohejl. Pleasure to be here. Thanks for having me.
Yeah, we were just chatting about our shared sort of background. So you did live for a while in Germany. I lived for a while in Australia. And your Germany is not rusty yet, which is impressive.
Das ist ja richtig. Dankeschön. Aber let's keep today in English or it'll be very painful for everyone involved.
Right. Fair enough. I thought we start this off with some timely topics right now around TradFi, DeFi, and the like. So I guess one piece of timely news at the moment is that TradFi seems to be coming on chain, like with quite a push. And Nasdaq just announced tokenizing equities. You had the Robinhood announcement about tokenizing equities, I think, in the EU. On Arbitrum and launching their own chain. Many incumbents in TradFi are launching their own chains. Payment giant Stripe is making its own blockchain with Tempo. At the same time, I feel like a lot of questions remain, right? Like, can this be actually really credibly neutral? Those words are being dropped by the announcements, but, will a competitor of Stripe really use Tempo? Will it really be permissionless? You get a lot of the lingo around permissioned validator set first, and it will be decentralized. Obviously, question remains if there will be different censoring capabilities on chain because of compliance and so on. So, is this bullish for crypto and DeFi or not?
Yeah. Well, I think the first one is we used to say the institutions are coming. I think we can say very clearly the institutions are here. Tempo and Nasdaq are recent, but even it's not that long ago, right? All the distributed asset treasuries started raising billions of dollars, not just for Bitcoin, but for, Ethereum and our other assets. So yes, the institutions are here 100%. Is it bullish? Yes, absolutely. It's bullish. I think depending on your crypto persona, you might have a different view on, is it bullish for the truly cypherpunk decentralized view of crypto? Could be, could not be. I think that remains to be seen. But in terms of crypto sort of technology powering, finance, global finance, absolutely. I think, it's bullish and it's happening. And it's kind of easy to see why. I actually worked for a time in an investment bank, and I'll always remember this sort of front office trader structure, middle office, which was at the end of the day, running end of day processes, which traders did what and what order from a customer did that match to, before it actually going to the back office where things got settled and payments were sent, and they were staffed by lots of people, took up lots of space. And when we take for granted in crypto that you put an order and it executes and everything settles and there's nothing to be thought about. And so, I think the traditional finance saw that coming a while ago, and that's where a lot of their interest comes from, efficiency. So absolutely, there will be more and more assets on chain. They'll be traded on chain. They'll be settled on chain. I don't think there's any question about that anymore. But yeah, in terms of like who wins, like where does value accrue, like where does activity happen, like how does tempo fit in? It's interesting. I think like Ethereum, I'm an Ethereum like native, I guess, like that's where my default is. And, Ethereum has done an amazing job of being incredibly neutral, right? There are, I think, about 1 million validators out there running now. And like, that you can get your transaction like into an Ethereum block and not be censored. Like that's just a thing. Is the same true of Tempo? Well, no. Like, or any permissioned chain? The answer is no. So is that then the solution for like someone who values like censorship resistance and, knowing that they can't be not just censored, but like, like be a competitor of Stripe and like Stripe decide to cut them out? Like, no. So, I think they would have a lot of work to do to prove to potential competitors that like this is the chain, right? That's where Ethereum, has a big head start. But like everyone should take this seriously. Like Stripe are the king of product execution. Like if anyone who's integrated with their APIs, like use their products, like, they are a highly performing organization. So yeah, like they're going to give it a good crack. I think they will find their niche. Maybe it's the blockchain for payment processing. Like, who knows? But I don't think it's a sort of, they replace Bitcoin and Ethereum or anything like that.
Yeah, it's a good point. I mean, because thus far, I don't know, have we seen actually like an incumbent or a large company come into the space and create something that is widely used? I mean, even on, for example, PayPal launched the USD, right? But I haven't heard much about it anymore. I don't know how much has been issued. So I wonder.
Yeah. I mean, I guess when you lead with the stablecoin, it's like, well, what differentiates your stablecoin? They have their platform. I occasional user of PayPal, but like I haven't really seen it come through in the product experience. So like, why am I using PayPal's? I don't. Other like a while ago, like there have been attempts at like permissioned chains, right? That like banks get together and say like, use this. But what always happens is that like one bank is like leading it, and then the others are like, well, I don't want to use your thing. Like you use my thing, and then it's like, oh, why don't we have separate ledgers? And it's like back to how traditional finance works today. And so again, that's why like Ethereum, I think, just keeps its position of like having the best real chance of being the place where things settle.
Yeah. Maybe the differentiation is here. I feel like you framed it a bit now that way for me to think about it that way. But like, because Stripe has significant distribution and a large client base, if they just funnel all this then on chain, obviously there'll be adoption, and they own but they're still like sort of being an intermediary, I assume. I mean, they're probably wanting to make profits from these transaction fees and so on that occur there.
Yeah, I definitely think that given their distribution and their ability to build out a big partner set, that they could drive activity to the chain. What form that takes, I don't know, but I think anyone who sees them as a potential competitor, which I think would cover a lot of large traditional finance, entities, if they're thinking about where do I issue my asset, where do I tokenize my asset, like where do I ultimately trust for settlement, I personally find it hard to see that being on a permissioned chain from a corporate. I think that's where credible neutrality, which has taken many years to build, that's where it will shine. And it is like, look at the stats every day on real world assets on Ethereum. It's winning.
Yeah. I liked your story with the front office for that company you worked at. It's because there's this saying, right, that what is it? 90% of the work kind of in TradFi and payments is to make it seem like seamless tech when it isn't. Like stitching all these things together and making it feel like a seamless thing to use. Whereas crypto or blockchain rails might solve these in a more technical.
Well, I think, for settlement, that's true. But, I'm sure we'll get into, like, once you go past sort of very basic transactions on crypto, things get very complicated very quickly, especially with DeFi. And it's kind of part of the RockSolid story as well.
Yeah. So let's get to that. And I mean, you guys just announced a 3 million raise, I believe. So
Yep.
congratulations on that.
Thank you.
And I think you worked also with Mina protocol before. Perhaps you can give us a bit of a background story on yourself and how RockSolid is coming about.
Yeah. So short backstory for me, like I got started in software engineering. I was working in high frequency trading. So always had this interest in like the intersection of technology and finance. Followed crypto as an observer for a while, like just, could see that it was interesting, but hadn't really seen real world adoption. My career moved on into product. I was at Cloudflare for a long time. And yeah, it was while I was there, I started to get more into crypto, running like Ethereum validators, like trading, just getting into it more. And I kind of became one of the go-to like people at Cloudflare for when crypto clients came, and your average salesperson like, what is this? That I was able to actually engage in those conversations. And that's where I really actually started to see the direction of the industry, and that it was up and to the right. And this thing that had always been interesting to me, I wanted to be part of, wanted to be my career. So that's what led to, eventually joining Mina, or the dev company behind Mina, OM Labs, as head of product. Did a bunch of work there, similar in a way, trying to simplify what is complicated, like zero knowledge technology, into something that applications and developers can use. But my passion really, has been Ethereum for a long time, and Rocket Pool had been like a big part of that. And so, saw this opportunity to build something in the Rocket Pool space, and that's what led to getting Ben, my co-founder, on board and pitching for funding, and eventually starting RockSolid.
Awesome. What is it? What is the Rocket Pool? I forgot the terminology you just used, but the Rocket Pool space. What is that for people who are not familiar with it?
Cool. All right. Well, I'll start with Rocket Pool and I'll go into RockSolid. So, Rocket Pool's what's called a liquid staking token. There are a few of these in Ethereum. Lido is a big one. Rocket Pool's like basically the second biggest one. It depends on how up to date people are on running blockchains, but take Ethereum as an example. It's just people running software on servers, right? And, so you need some expertise, you need some equipment, and then also you need some money in the form of ETH. And so you need 32 ETH. That's like $120,000 today. Not everybody has that, right? So people who want to participate in staking and sort of securing the Ethereum ecosystem and getting a return on their ETH, they can run a validator themselves, or they can stake with a liquid staking token and say, here is some ETH, like maybe here's 1 ETH. Like, I want you to run the software for me, please. And what liquid staking tokens do is give back the user a token. So rETH is the Rocket Pool token. And that token accrues value over time as the Ethereum network generates rewards and pays rewards to the validator. So you've basically like almost paying someone to run the validator software on your behalf. And that was novel because for a while, in the beginning, it was like you needed 32 ETH, and that was a lot. And so Rocket Pool made it so that you could just deposit a little bit. And then what they also did was allow node operators to come in and say, okay, maybe I don't have 32 ETH, maybe I only have 16 ETH, or maybe I only have 8 ETH, but I want to run a validator. And so that's what they would allow people to do, is bring a small amount of ETH to run a validator, match that with the stakers and say, okay, together we've got enough ETH, enough equipment, enough expertise that we can run a validator. And it took care of all of the difficult stuff, like what if a validator's offline, or what if there's like someone acting maliciously, like the protocol sort of, is able to handle all of that. And so that's a liquid staking token in general, and Rocket Pool specifically.
Is it the leading one? Like, can we compare different ones?
Lido STETH is the largest in market cap. It's the leader in terms of decentralization. It has the most node operators. And so it very much is like a favorite of Ethereum OGs, people who favor decentralization. It's got a, like you would our community makes the argument a lot. It's the best risk-adjusted return, because one single validator can do very little damage to Rocket Pool because there's so many of them, right? So like people who value that for either values or just for like the sort of risk, the risk profile. That tends to be who it's most popular with.
Okay. Sorry. So which one's the most decentralized one? Is it Lido or Rocket Pool?
Rocket Pool's the most decentralized. Lido staked ETH is the largest in market cap.
Gotcha. Okay. So yeah, how important is decentralization in that context, actually?
Yeah, I mean, people have different opinions. I think it's very important, right? Like, if you think about, we were just talking about why Ethereum's good, like, and about credible neutrality, right? So if a single entity controls too much stake, then that single entity can start doing bad things. Like, not to say anyone would, but like, the whole point is that you don't want that to be possible. And so both the amount of stake a single sort of project controls, and then the amount of stake like each operator within that project controls, that's the sort of fundamental strength of Ethereum right there. And so that's a little bit where I got into it. Like, Rocket Pool is like really kind of fighting the good fight to keep Ethereum decentralized. And the protocol itself is very decentralized. But one thing, we'll get into is that it hasn't been as good at is getting integrated into DeFi and giving people opportunities of things to do with the rETH, which is a little more of a centralized thing. But yeah, I think for the good of Ethereum, for the good of liquid staking token, decentralization actually, in this case, really matters. It's not just a fun thing.
Right. Okay, so you basically stake. It helps with capital formation. You pool the stake. You pool the ETH. It gets staked. You receive sort of like a receipt for it, which is, I think, the rETH token, right?
rETH?
Yeah, yeah, there it is. And you can trade that in against your stake plus the yields when you want to, so to say, right? So what do you guys now do as RockSolid in this construction, so to say?
Yeah, great question. So, like, we are a general vault platform. So we'll get into the generalized part. Well, actually, maybe we start there. Like, what's a vault, and then like I'll explain what the rETH vault is. So, a vault is a smart contract combined with a like investment objective and then a team behind it. So it's at the highest level, you deposit some asset. I'll take rETH as an example. It then gets pooled, different to the pooling that we talked about for Rocket Pool itself. But you have this receipt token getting pooled, and then that gets deployed in a way to generate a return. And so in DeFi, there's lots of different strategies. We can get into them. But just as example, people might have heard of leverage looping or borrow lending, liquidity provision. These are all things that you can do with either ETH or liquid staking tokens. With a vault, it's like you have an operator who's deploying that on behalf of all the depositors. So if you want to generate returns from your asset, instead of you becoming a DeFi expert and running like a little mini hedge fund out of your garage or something, you're able to just have a single click deposit and then have that those assets deployed. So with rETH, like that, we're launching our first vault in partnership with Rocket Pool, which is super exciting. So before today, if you had this receipt token, rETH, and you wanted to do something in DeFi, you basically have to go look for opportunities yourself. So you might find, I can supply rETH to Aave and earn some additional reward. And then I could maybe borrow against that position, maybe some USDC if I want to go buy something, or some other asset that I want to do something in DeFi with. But then you got to start thinking, okay, how much can I borrow? Like, what's the risk I get liquidated? Maybe my borrow rate is good today, but what if it goes up or down later? Like, what do I do? And so
you need like domain specific expertise in a way. Yeah.
Yeah. And there are some people that like, this is literally like they've made careers out of this because they started doing it early and they just love it. Right. And so like, that's what we call the degens, right? DeFi degens. But I think there are a lot of, people who say, like, get interested in Bitcoin, then get interested in Ethereum. Like, the next level is kind of staking. And they're like, okay, I'm earning 2.5% from my liquid staking reward, but I know there are these opportunities in DeFi and I want access to those. But I don't know what to do. And Like, I don't know how to monitor things. I don't know how to assess the risk of protocols. Like, I just don't know. And so that's where we come in, where say, here is the sort of the interface that you're familiar with. It's just like the deposit button, and you deposit your rETH and you get back a share of the vault. And then us as RockSolid, we've put together a partnership of not just sort of Rocket Pool, who has our first launch partner, who make the vault available on their website. So people who are staking on rocketpool.net, they can actually from there deposit directly into the vault, or they can do it from our website. But when you deposit in the vault, we then have a professional that they're called curators, that they're out there constantly assessing, like, what are the best risk-adjusted returns in DeFi right now? Is it Aave on mainnet? Is it Aave on Base? Is it liquidity provisioning on Linea? Is it some new chain that's just launched that is offering incentives, and that like that we can sort of go to them on behalf of our depositors and say, you know what, we've got this pool of rETH. Like, we want to bring it to your chain, but we want to see incentives for rETH specifically. And now all of a sudden, rETH depositors are able to access these opportunities. Yeah, so we've launched this with Tulipa Capital. They're our curator for the rETH vault, and they're already out there. Not just assessing existing opportunities, but negotiating new opportunities for rETH and for rETH holders, which is cool. Yeah, I can keep talking all day about that, but that's the high level.
Yeah, that's a good moment to pause, I guess, because that's interesting. So basically, it's also about negotiation power, then, right? Because you have the pooled capital; it's more significant. Now, it might be in the interest of some other protocol to integrate rETH.
Yeah, let's talk about that for a second, actually, because I think this is especially for people who are new, maybe even not new to crypto, but new to some of these parts of DeFi. A lot of DeFi is decentralized, and that's awesome. Take a protocol like Uniswap. Like, it's just out there, it's immutable. A lot of crypto happens behind closed doors, and it's people negotiating and it's projects negotiating, and that's just the way business is done. And the smart contract might be immutable, and that might be decentralized, but a lot of the business development is still person to person. And so that's one thing where Rocket Pool hasn't been a leader, right? That's why it's not as well integrated in DeFi as, say, Lido is. And that's one thing that the vault can help change, because exactly as you said, you pool capital, that's now leverage. That's negotiating leverage to go out there and get better deals, to get new deals that are only available to rETH holders. And we're a business, we're doing this also to make money, but the thing I like about it is that it helps even the playing field. And I think Rocket Pool as the most decentralized liquid staking token is core to the strength of Ethereum. And by having this DeFi layer and having it be 100% A-class DeFi asset, we actually help strengthen Ethereum as well.
Yeah, that's a good way to frame it, because let's say you have a stable coin which is very centralized and has inherent risks that are attached to that, but it's been around from the start and is widely used. I hope this doesn't sound like any stable coin that exists. So that's inherent risks just through the proliferation and use of this. It could lead to systemic risks even, right? And then maybe you have a more decentralized version of a stable coin. So it could actually be, a win-win, or also beneficial to the ecosystem to kind of get it more in use in different protocols.
Yeah, definitely. And I definitely think people who don't think about this much, but they're if you're invested in Ethereum, you're invested in the security of the network, and ensuring distribution of stake is key to that. And so if you're staking on one of the large exchanges, or you're staking with Lido, you're not actually sort of in a way acting in the interest of the network, because those are already big chunks of stake. What makes the network more secure is distributing it. And so take a look at rETH, and obviously once you've got your rETH, when you're looking at what to do with it, that's where RockSolid comes in.
Yeah. Can you just tell me, like, sort of, or maybe that is a question that viewers also ask themselves, kind of like, what would you want to do with the rETH? Like, or what would, if it's, for example, lending and borrowing, why would someone want to borrow it? Like, what's sort of the underlying rationale for these, for the usage of these liquid stake tokens?
Yeah, that's a good question. It's a rich and varied world out there, I'll say. Like let's say you were holding rETH, and you wanted to make a return, and you were comfortable with lending it on some lending platform. Like, who's on the other end of that? Who's gonna pay you, like, pay to borrow your asset? There's a few things, but like trading desks are one. There are proprietary trading firms that make money taking large positions on ETH and trading momentum or trading macro or like algorithmic stuff. It's an asset that they want, and they might want it temporarily. There's a rate at which they're willing to pay for it. There's rates at which they're not. But there's very often someone who wants to borrow an asset. Similar for stablecoins, right? It could be, again, sort of trading desks, or it could just be somebody who's crypto rich. They own a lot of ETH, but want to buy a house and don't want to sell their ETH. So they're prepared to pay to borrow USDC if it means they don't have to sell their ETH. So those are just two examples, but like there are endless reasons why in DeFi, like a given party wants to borrow an asset.
Yeah, interesting. That's a good point with the selling, not wanting to sell. So it's just a deposit button, like you said. Maybe you can show us in a sec, but for example, so is it active management that's behind the use of the rETH then? Like you said, you work with, was it Chalupa Capital? So is it like
Capital.
Active management of the portfolio, so to say? What's the mandate there? What's is it a split? Like, does the pool get split between different people? Is it different strategies? Can you choose different strategies as an rETH holder? So these are some of the questions.
Great question. So in like basically the goal of the vault is to like target the best like risk adjusted returns we can find or negotiate in rETH. We target 10% return when that's available. But like, in DeFi, things change rapidly. Funding rates change, like opportunities change. But that's the sort of, target we set ourselves. There are returns going from 2% to 100% in DeFi. Like, depending on your risk tolerance, you can go crazy. And like, we're looking for that sort of sweet spot where it's significantly more than just holding a liquid staking token and earning the network rewards, but not the sort of crazed, sort of DeFi approach. So that's where we try and land. We are the like rETH vault, so we want to act in a protocol aligned way. So whenever funding rates permit, which means whenever we can deposit rETH and borrow ETH at a cheaper rate than what we get for the rETH, then we do what's called a leverage loop with some allocation of the portfolio. So for folks who haven't seen it, it's pretend you have one rETH. You can deposit that into Aave and you can borrow, say, 0.8 ETH. And with that 0.8 ETH, you can mint 0.8 rETH. And so now you're earning the return on 1.8 rETH. And you can take that extra 0.8 ETH and you deposit that back into Aave and borrow a percentage of that. And now you've got another 0.6 ETH and you can mint rETH with that. And so that's what's called a leverage loop. It's a very popular use of Aave. It's great for the protocol because you're growing the TVL of Rocket Pool.
Yeah,
like that's more
but with leverage,
now
right?
able to be deployed. Yeah, and it is leveraged. Yeah. And that's what especially Lido did really well early on, and that happens with rETH as well. But it's one of the ways that you need to monitor it. Like I said, funding rates can change, and so if all of a sudden the borrow it costs you more than what you're earning in the token, then you have to unwind the position. And again, Like that's where you have a professional curator who's, yes, monitoring the positions all the time and pulling them out. Whereas if you're doing this yourself, it's like when I'm on holiday, what am I doing? Am I monitoring my positions? Like, that sort of thing. So yes, actively managed for things like that.
Do you,
and then in terms of how,
Steve, real quick, do you need to manage or do you need to monitor price as well there? I was just thinking in terms of liquidation cascades, but it's the same asset. So your collateral goes down in price, also the asset you received goes down, or?
Very, very good question. So the reason why it's a popular strategy is because, the assets are correlated. So rETH and ETH move together. But you still, especially with any amount of leverage, need to monitor that carefully because asset prices can depeg. And that's happened recently, actually. Like as of recording, most LSTs are slightly depegged, 1 or 2%. And it's just because there's a long exit queue for Ethereum. And so if you are in Lido, for example, and you want your ETH back, there may not be enough ETH immediately available to return to you. And so validators have to exit and they have to go through a queue. So if you really need your money, your ETH, say you're a trading desk, you might be prepared to pay, to take a discount to get it now rather than wait. And so there is a slight like depeg that happens. So you've got to monitor that because that leverage, too much depegging and now like, your collateral is not enough to satisfy the loan and you get liquidated. But it's much less risk than if you do something like borrow USDC with ETH as collateral, right? Because that can move violently and quickly, and that's how you can get liquidated quickly. Yeah. So we're talking about like the sort of active monitoring, active strategy selection. Can users decide? So in this vault, no, it's not a user selection. That's a feature. Like it's you deposit ETH, and we, and especially Tulip, are out there, assessing what the best opportunities are and negotiating them in real time. So when we can, we keep that leverage loop allocation to rETH because that's just great for the protocol. But looking at the sort of list today, depending on when this airs, but we'll likely have some allocations to Aave, to Euler, and to various protocols on Linea that are running incentivized programs at the moment. And that's just, that's the perfect example, right? If you're doing this yourself, one, you may not even be able to access them because often incentives, are negotiated in bulk. And even if you do, now you're bridging, you're paying gas at smaller amounts, the gas and the fees eats into it. Like you've got to be, assessing the risk of each bridge you use. There's a lot, right? There's a lot to actually, getting the best risk adjusted return for your ETH or your rETH. And that's what we're doing.
Right. And how does Chulupa Capital then get paid for their effort? Is that baked into, is that on-chain, like a percentage? How does that work?
Yeah, good question. So the fees are transparent. There are fees. So there's a 1% service fee on the vault. If you put that in TradFi terms, that's like AUM. So 1% of the total assets in the vault go as fees. That's for the service fee, and then there's 10% performance fee. So as the vault makes money, like the more it makes, the more the performance fee comes. So that's to align, incentives. One key thing about the performance fee, it's only on the way up. So if for any reason the vault, like if it loses any value and then catches back up, the vault doesn't earn any fees on the way back up. It's like high watermark only once you go to new highs. Performance fees earned. So that's a nice feature, and that's verifiable.
It gets sort
on-chain.
of burnt in. So it gets sort of like it was worth that much, the vault, and then it goes down. So on the way up to that level, you don't get any performance.
You don't
fee.
get performance fees. Yeah,
okay.
And you can see that in the smart contracts. We use a battle-tested set of smart contracts from a partner called Lagoon. It's an implementation of ERC 7540, which is asynchronous tokenized vaults. Already there's $150 million or so managed by those contracts, battle tested. But this is a nice thing. You can go, look, what is, like, how are fees levied? Like, you know that's how it's going to work. So yeah, the fees basically go to a wallet, and then they get split between, between our partners, and the exact amounts that's commercial in confidence, but the total vault fees are 1% on the assets and 10% performance, and then it gets split between the parties.
Right. Okay, that makes sense. I guess it makes sense because you could otherwise create volatility and earn the performance fees, right? You could decrease the rETH in the vault and then up again.
Yeah.
Sort of.
If you're looking at vaults, you should definitely check on that sort of high watermark logic is there, because otherwise the incentives are definitely the wrong way around.
Right. And I guess deposits would not count as an increase in the capital base for the performance fee.
That's right. It's like, what is the change in asset value of the vaults, excluding deposits, from the last update to the next update? Is basically how it works.
All right, that's not trivial. It's a lot to keep in mind.
Yeah, I mean, and that's why you want to use battle tested smart contracts.
Yeah. So, are you looking at this also in a multi-chain way? So, are you thinking to get rETH to other ecosystems outside of Ethereum as well? What's your thinking?
So on the rETH vault, definitely it's multi-chain in terms of like EVMs. So we're definitely on day one deploying into L2s. Like I mentioned, Base, Linea, likely are two that are very likely to be there on day one. EVM compatible alt L1s we would like to deploy to, and there it just depends on, is the bridge infrastructure in place. So that's where some of the fun stuff is, that we're talking to the core team, talking to the DAO. Like Rocket Pool is truly a decentralized DAO, so sometimes you've got to get folks excited about a thing and then vote for it on chain to open up opportunities like this. But technology wise, we can deploy to any EVM chain. The infrastructure, like a lot of our infrastructure is multi-chain as well, but the smart contracts are EVM based. So we're not going to be launching with a non-EVM smart contract. But again, the actual deployment of the assets will go to multiple EVM compatible chains.
Right. So what is the sentiment? I assume you're very active there in this ecosystem. What is the sentiment in the Rocket Pool community around this? And like you said, I assume if a Rocket Pool would get, or to what extent is it permissionless? If some other protocol wants to integrate it, it just happens, right? Like it doesn't require the go ahead from the Rocket Pool DAO.
Right. So for just a new protocol for an Euler or a a Morpho or whatever to have create a pool that has rETH in it, that doesn't need any permission, because that's just relying on the permissionless immutable contract. But there are things that do sometimes need DAO approval. Like, we're still actually figuring out the whole bridge scenario, but there have been some chains where the DAO has kind of said we don't think it's right for the protocol to have a bridge to that chain, so we're not going to do it. There is sometimes some back and forth. But in terms of how the community is responding, so it's not fully public even within the Rocket Pool Discord yet at the time of recording. Everybody we do talk to is super excited, because anyone who spends time in the Rocket Pool Discord, which is amazing, by the way, everyone should join the Rocket Pool Discord. It's a lot of fun. But there's this constant stream of folks that come in and say, love the project, love the protocol, love what you guys are doing. I just minted rETH. Now what can I do with it? And the answer for a long time has been, there's a community maintained spreadsheet, which is great that somebody does this, but here are the opportunities that are out there. But it's not really the experience that most people are looking for, right? Like it's, unless you're a degen, in which case you're finding these things on your own. The experience that, your average, even crypto user is looking for is like, let me click the button and then you take care of doing, all of the magic behind the scenes so I can earn the rewards. And so, everyone we've talked to in Rocket Pool, they're excited about it. We will go public with the community very soon, but we've got to keep some steam into the fundraise announcement and the launch. So we haven't been able to share everything with everybody yet as much as we'd like.
All right. Well, that'll be exciting then. Since it's like a one-click experience, do you want to show it? Share your screen?
Yeah, we can take a look. It's I've just got a demo vault here because I don't want to give away the whole production thing, but just to show the sort of the easy one click. So we'll go back one. You can definitely take a look at that. So if folks are on the website, they click deposit. You'll see the list of vaults. We'll be launching just with the RockSolid rETH vault. So like I said, we'll be targeting 10% and check back at launch time, but there will probably be incentives as well. So that number might be higher. But this will show the 30-day return. Just to take a look at some of the things, you can see this is the amount of shares that you have within the vault. You can see the fees, they're transparent. You can go look on chain. And I've only got one strategy listed here, but this is where we actually break down where all of the strategies are and how they're performing. So you can go back in time and have a look at what strategies were deployed at any given point in time and how did they perform. One nice thing is because the assets are deployed from a smart contract, you can actually see the positions. So just in this test vault, I just made a small deployment to Aave, and so folks can really go and verify, right? How are the funds that I've deposited in this vault, how are they being deployed? And so it's this nice mix of, it's still, there is centralized control. There are teams of people who are deciding what the deployment strategies are. It's not all decentralized, but there's still that on-chain transparency, which we really love. But yeah, let's say you've got some rETH and you want to get exposure to all the different strategies of the vault. Pretty sort of familiar interface, especially if you've already staked ETH for rETH. You would have been through something very similar. You just enter, you click deposit, and depending on whether you're using MetaMask, Aave, etc., you can see you're sending rETH to the vault and you're getting the shares back in return. And so the shares are a claim on the assets in the vault. And all of the different positions. So, positions on Aave, positions on other DeFi protocols, and that grow over time. And so, the exchange rate of your vault tokens compared to the underlying, they grow as the vault grows. So we're on mainnet. So that'll come through in a few seconds. I was mentioning. That you can see the all of the positions on chain. Everything. The vault itself is a smart contract, so the technical folks can go and take a look at the actual contracts. You can see people depositing, redeeming, all on mainnet, all there. So our transaction completed. You can add that to your wallet, see the value change over time, and then if you were to come back at some point, actually I didn't need to do that, but you come back at some point in the future, you can then submit a request to withdraw. Now, one security feature, so this is very intentional, but it's definitely worth users knowing. There is a withdrawal delay period. You can see here it's 24 hours, and that is for the security of the vault. One of the ways that protocols have had issues in the past is with things like what's called Oracle, bad Oracle updates, basically reporting sort of the value of something to be smaller than it is, and then people go and do complicated things to basically withdraw more from the vault than they should be able to. And so we have very strict protections against that in place. Does mean there's a slight, you do have to wait before you can then come back and click claim. But it's one of the really nice sort of security features of the vault. Anything else you want to share? And we add sort of notes on a regular basis just to keep folks up to date on what we're thinking, what strategies, where we've moved, besides being able to go back and forth historically. But yeah, I guess the takeaway is it's single click deposit. All that hard work of deploying to all the magic of DeFi is taking care and for you. And when you want to withdraw, you just come back, click another button.
Nice. I like there's also qualitative information on what is currently happening. So do you keep some of the rETH in place for withdrawals, or is all of it?
Yeah, there's always some just to meet withdrawals, which is it's almost like operationally convenient. You want to have that, so you're not having to unwind positions just to meet redemptions. Like we also we don't we don't basically deploy ETH to strategies that have protocol enforced lockups where you literally can't get the ETH back out of the contract. We will deploy to things where there's where you only get the reward if the ETH stays for a period of time. And so, you don't want to withdraw from those strategies early, right? Or you give up the return. But things like the leverage looping positions or just like sort of vanilla lending positions, those can be unwound, at quite short notice to meet redemptions.
Right. Is the use of liquid staking still increasing? Like, what's the landscape look like? I haven't been monitoring that much.
Yeah, that's a really good question. From the merge, when Ethereum went proof of stake, it was just up and to the right, like inexorable up and to the right. Because if you were holding ETH, like, why not stake it? All right, like unless you were unless you were the most risk averse, where you didn't even want to bear any staking risk. So it was up and to the right for about 2 years, and then there was like a 12-month period, maybe a bit longer, where like ETH was kind of in the doldrums, like the sort of crypto sentiment was down, Ethereum sentiment was really down, and actually there was less staking during that time. It really kind of flattened out. But yeah, it's been rising again since. Like ETH's got its Mojo back. There's been renewed interest in staking, and yeah, I think even as protocols like ours launch and just make it easier for people to interact with the space, so staking's cool again.
Okay, well then it's a perfect time for this, I guess. Well, it's good to see that you guys are building things in DeFi to make the experience for one better, because it's good UX to have just a one-click thing happen. It's often the opposite of one click. It's it's millions. I suffer through that sometimes.
Rest assured, our partners aren't only doing one click. They're doing the hard work, but it's okay. That's what they love.
Yeah, exactly. And it brings more utility to an existing, I guess, token, which is also systemically relevant for the staking landscape of Ethereum. So, I mean, if someone wants to stay up to date, where can they go?
Yeah, so RockSolid.network is our website, at RockSolid HQ on Twitter. Our website links to Discord as well. You can come join us there. Anyone who's interested, in rETH, either depositing or checking out the incentives that we have at launch, just go to the website, click into the vault. For other tokens, especially other LSTs, where like they want to provide this sort of single click experience and provide a place for their users to pool capital and start negotiating on their behalf. Reach out, hello@rocksolid.network. Similarly, like we see a lot of potential here, both for stablecoin balances, whether those are in wallets, on platforms, whatever. Like stablecoin vaults are a thing as well. Like we were talking about who wants to borrow stablecoins. There's even more utility there. Talking to a number of projects where they have stablecoin balances, either directly or on behalf of their users. That's another great use of vaults. And then just recently, I'll mention like distributed asset treasuries, right? We talked about this. They've raised billions of dollars. They want to purchase digital assets, which they are, but already right? They're like, well, I can do more with this. And it's already becoming a race between, those guys, how they deploy and what returns they can earn. And it's a different world. They need to, comply with all the traditional regulations, and there's different reporting requirements, etc. But that's the great thing about vaults. You just deposit an asset. The strategy is completely tailored, and even the returns can be sort of structured in however way you want, whether it's a stream of payments or just growing the vault shares.
Yeah.
And so, we're talking to a bunch of these distributed asset treasuries as well. I think we've got a really good solution for them. So, get in touch.
This is really exciting because it is like asset managers, but it's transparent because it's on chain, because you can see what's happening with the assets. So that it is if you think about it, it is a paradigm shift there, because this transparency matters, right? Otherwise, you put it in the black box of a hedge fund or something, and you're not exactly sure. You still have to trust humans more than you can trust like the on-chain code.
Yeah, it's like trust but verify, but like the verifier is sort of done for you.
Yeah.
On-chain.
So do you think there is? Do you think this? So do you think all these things that are kind of happening with TradFi, like a digital asset treasuries you mentioned, these are spilling over in DeFi then? Will there be like a proliferation here of DeFi that becomes like significantly sizable?
Yes. So already billions of ETH are being purchased, right? Some portion of that has already been supplied to Aave. There are already DATs doing that. And you can be sure that they're looking at what is the next opportunity that gives me an edge over my competitor, because that's already a competitive space. So it will be slower. It's not like degens jumping on the next thing, right? They've got to, go through their processes. But yes, absolutely. Assets from DATs will continue to be deployed into DeFi, and that's going to grow the space.
Exciting times. Thank you, Steve, for coming on the show.
Absolutely. Yeah, thanks for having me, Sohejl. Really, really enjoyed it.